So, all right, so that's just limit order, less than or equal to. If you put it that way, it will be much clearer when I explain the stop limit. So with market, if you use market order simply means when the price is equal to this buy, and that is the current market price, and you don't even determine whatever current market price it is, that's when market executes. But stop limit is when price is equal to less than a certain price I want, not the current market price, but I'm going to type in a price, and that price is say 0.473. So I'm saying that any price that is less than or equal to this price, buy. So it means that if I use a limit, but my aim is actually that I don't want this thing to buy at this current market price, because I think that it may go down and I don't want to buy and then it will dip on me. So I'm only waiting for it to rise to my desired point, which is 0.5473 before I buy. The moment I use limit, this is going to execute because it has satisfied the condition, which is less than or equal to my price. Okay? Because 0.5382 is less than 0.473, 0.5473. So because it's less than my desired limit price, it will execute because the condition for limit order is less than or equal to. So if I don't want that condition of less than or equal to apply, I just want that the only time my trade should execute is when the price of the coin rises to 0.5473. Then I must use a stop limit. Once I use a stop limit, I erase that less than or equal to what do you call that condition. And I'm only saying that the only condition under which, so let's come here now. So stop limit. The only condition under which this trade can execute is when the price of the coin hits 0.5473. And when it hits there, I want you to buy at the same price. So this one, stop limit doesn't have less than or equal to condition. The only condition is the stop price that you have provided. So no matter what is happening in the market, until that it hits that price, which is the condition, the specific condition you have given, your trade is never going to execute. Please, is it clearer now?
Yes, but I have a question. Why will you go and buy it at a higher price than it is currently?
So that's what I'm saying. It's you. Maybe you don't want, you are a swing trader, okay? If you are a swing trader or you are a day trader, you enter the market, take profit within a very short period of time. So you only want to enter the market when you are sure that at this point it's going to take an uptrend. Because you don't want to enter the market, then it will start dropping immediately. Because once it starts dropping, you are run at a loss, right? So sometimes we have what we call the consolidation. It's like price is swinging in between some particular range. It's not really telling you, giving you a clear idea as to whether the market will go up or it will go down. So because it has not clearly established that, but you've read the chart and you feel that from previous chart, if it rises to a certain limit and is able to cross a certain resistance point, then there's a very high chance that it's going to continue rising. So you only, because you want to take immediate profits, you are a swing trader or a day trader, you only want to enter the market when it rises to that sure point that you know from there is going to keep rising. Then that is where you buy at a higher price than the current price. Is that clear?
Yeah.
All right. So stop, market limit, stop limit. Are we clear? Are we clear on this?
Yes. Yes.
Stop limit.
Come again.
Sir. Hello.
Yes.
Hello.
We can hear you.
Yeah. About the stop limit.
Yes.
Does that mean that you can set the same amount for the stop and then the limit together? Because what I'm seeing right now, 0.54.
You can do that.
Oh, okay.
You can do that, or you make, I could have made this one 4. But the one thing is that most of the time, the moment the stop price, which is the condition you've given, is satisfied, the trade executes. So the condition, your condition is what really matters, which is here, where they set stop price, the stop. That is what you should use to determine the price limit or the amount at which you want to enter the market. This one mostly doesn't matter very much. But if you are buying, I don't know how to put it, but just make sure that your stop is satisfying your desired entry point. So once it's at your desired entry point, you can set the same amount for them or just make one slightly less than the other. So if the thing is moving on an uptrend and you want to catch it when it rises to a certain point, you want to put maybe your stop can be 0.5473. That's when I want the condition that should be satisfied. So because it's on the uptrend and I want that when it rises to that point, it should buy, I can make this slightly higher by just maybe something at 1 point. It will still execute. If it was on a downtrend and I wanted that when it drops to a certain price, then I could have made this one slightly lower than my stop. But if you put the same price, it will still execute at your satisfied condition. Okay. All right. So please, is this clear?
Yes, sir.
Another question. I want us to really understand this before we move to the features aspect too. That's why I'm
So can one also set, that means that you can equally set this below the current market price?
Yes, you can.
And it will also execute.
Yes, it will also execute. So in that case, your condition will be, so let's go back to the candle. Maybe assuming that I wanted it to execute when the price drops to somewhere here, 0.5326. So when I come here, I can put my stop as 0.5736. Okay. And then here, maybe I can put something like 0.5735. So this way, when it's dropping until it hits the 0 point, which is the condition of 0 point, the condition of 0.5737 is not going to execute.
Okay.
Hope that's clear.
Yes.
All right. So just understand that when you use limit, you are saying less than or equal. That is if you are buying. When you are buying, limit order is less than or equal to. So any price below your limit price. But if you are selling, it's the opposite. If you are selling, it is greater than or equal to. Because remember, we sell at higher, we buy low, we sell high. So it always want to sell at a higher price. So if you are using sell, if you are selling and you use limits, it becomes greater than or equal to. So any price greater than or equal to your limit price, it will execute. Okay.
Clear.
All right. I don't understand what you mean by can they expire.
Maybe he's asking if the thing is standing for a while and it's not executing. Can it expire?
I've never seen that before. I've never seen that before, especially in futures trading. Yes, so that's it. Like Enoch said, once your condition has not been satisfied, it will not execute. It will stay there for as long as I set up a futures trade, for instance, and it took, I just forgot about it. It took 3 days before my condition was satisfied and it executed. I came back and there was profit there waiting for me. So until that is established, it won't execute. There's nothing like expiration. Okay. All right. So this is spot. Okay. So that's how you set up a spot trade. So this one, when you go to features, is slightly different. So at the lower bottom, when you come to the bottom of the screen, you can see the features button there just after trade. So when you click on the features button, it opens the futures trading window for you. Now you see that it looks almost the same thing like the spot trading, but with a few adjustments. Now we have what we call, you can see the trading pair at the top. Then you can see something like isolated. You can see 5x there. Before you now have your buy and sell buttons. Then you have your amount. Okay. Are you sure we can do this without money in my futures trading wallet? The way this thing is standing there like that. Okay, it's gone. Let's see. All right. So when you come to features, there are just a few things we need to understand here. But before that, what makes features different from spot trading? Now, features trading allows you to trade with money that you don't even have. Okay. Let me mute all. Somebody is. Sorry. Because the phone is the host. Whenever I mute everyone on the phone, it mutes the laptop too. So sorry about that. So I was saying that features trading allows you to trade with borrowed funds. Okay. In spot trading, I mentioned that you can only trade with money that you have. So if you have $10 in your wallet, that is what you can trade with. If you have $50 in your wallet, that is what you can trade with. But when you come to features, features allows you to trade with borrowed money. So in features, it's like you can take a loan from the exchange, trade with it, take your profit, give their money back to them. But before you can do that, you must have some money in your features trading wallet to use as collateral. It's the same thing in the financial world. When you are going to any bank for a loan, they always ask for collateral, so that in case you are not able to pay back your loan, they will keep the collateral, so that they don't run at a complete loss. So it's the same thing here. So you should have some money or some liquidity in your features trading wallet before you can trade features. But it is not limited to how much you have. You can use the leverage in features trading to borrow more money from the exchange, trade with higher capital, get more profits, and give the money back to them. This is the basis of features trading that makes it different from your spot trading. Please, is this clear so far? If it's clear, type clear in the chat box before I proceed. Is this clear so far? Let me know. Is this clear so far? All right. Enoch says clear. Mr. Freedom, Charles. All right. So I'm seeing a lot of clear. So please, if you are confused, say you are confused. Don't follow all the clear, and then we'll move and then you miss. Okay. All right. So now, setting up a features trade. I think I'll use one of the calls that was given on the page as an example. But before that, let's look at the interface, because there are some things you are seeing here that are not on the spot trading interface. Majorly, like in the trade, where you are seeing the Y, the XUSDT, that is the trading pair. So once again, you can use that to search for other coins that you can trade on features. And all these ones are available for you to trade on features. Okay. All these coins are available for you to trade on features. So you can use that place. Just click on where you have the Y, the XUSDT, that's the trading pair. Then you can search for the coin that you want to trade. How much, from my experience, even with $1 in your features trading account, you can trade features. So, but you can just, to be safe, you should have at least $5 there. Then you can trade, because the leverage allows you to trade with more. And we'll explain the leverage very soon. Okay. So once you've selected the coin you want to trade with, the next thing you want to do in features is to set your margin type and your leverage type, or your leverage. Now, what is margin? Margin tells us how much of your, what will I say, your liquidity you want to use. So assuming that you have $100 in your features trading wallet and a particular signal is given, but for that signal, you don't want to use all your $100 to trade. You only want to use just $20 of your $100 to trade. You use isolated, okay? And then once you use isolated, when you are trading, even if you run into loss, we have what we call liquidation. Liquidation is the price of the coin at which you lose all your collateral. So if you use isolated, what it means is that the only collateral available to the exchange is just that $20 you've made available to that particular trade. So no matter how bad the market dips, when you run into liquidation and you are losing all your collateral, you won't lose all the $100 in your features trading wallet. You lose just the $20 that you made available for that trade. But if you leave it at cross margin, what it means is that if the market is going against you, okay, if the market is going against you, it's not going in your favor, and it goes and then they finish, it goes so bad that the $20 you allocated for the trade, they take everything as collateral because the market is not going in your favor, you are losing. They will go deeper into the remaining $80 in your wallet, continue taking from there until either the trade comes back up or they finish the entire $100 in your wallet as collateral. Then the trade will end. So in short, I'm trying to let you know that when you are trading features, always make sure that you have selected the isolated margin so that the only money you can lose is the money that you've made available to the particular trade that you are doing. Please, is this clear to you? Is it clear?
Yes, it's clear.
All right. Now, that's margin. So once you've understood margin, the next thing you want to look at is the leverage. Now, the leverage, that's where you are seeing the 5x just after the isolated. The leverage is the one that now you can use to borrow money. So 5x means that maybe if I have $10 and I choose a leverage of 5x, it means that I'm telling the exchange that I'm having only $10, but I want you to borrow me 5 times my $10. So that instead of trading with $10, borrow me $50 so that I'll trade with $50. And then if I make profit, I'll take my profit and give you back your $50. If I increase my leverage to 10x, which means 10 times my capital, it means that I'm saying that I have $10, but I want you to borrow me $100 because 100 is 10 times my current money, which is $10. Borrow me $100. Let me trade with this $100. I'll take my profit and give you back your money. Then you can go higher, $20. I mean 20x. 20x is 20 times your money. So it means that if you have $10 and you choose 20x, you can trade with up to a maximum of $200. Please, I hope the leverage is clear. So leverage gives you, or it indicates how much you can borrow from the exchange based on how much you have. So someone who has $100 in your features trading wallet and you choose a leverage of 10x or 10 times, it means that with $100, you can trade up to a maximum of $1,000. If you choose 20x, you can trade up to a maximum of $2,000. Okay, so that's leverage. But to be safe, because whenever your leverage times the change in price is equal to 100%, you can get liquidated. So the higher, so what I mean is this: imagine you choose 10x leverage. If the price of the coin should drop by 10%, 10 times 10 is 100. It means you are losing 100% of your money, something like that. Okay. If you choose a leverage of 20x and the price of the coin should dip by 5%, you lose all your money. So don't be too greedy, and because you want to make more money, then you're going to set up a higher leverage. We always advise that keep your leverage around 10% or below, so that you don't lose so much money if the market should go against you. Okay, that's why most of the trade calls you see, you always say 10x. Some even see 8x, some you see 5x. All right. Now, if leverage and the margin is understood, now let's look at the next thing. The buy and sell button is the same thing as we explained in the spot market. So if you want to sell short, so now features, to the other thing about features is that whether the market is going down or the market is going up, you can still make profit. Okay, we might not go into the technicalities today because I'm sure we have another 40 minutes. So, but maybe we can take another day just to explain features trading on its own. Okay, but you need to understand that sometimes you see a trade call and we say sell short. Sell short means that we have seen that the market is likely to go down. And for the market to go down, if it is spot trading, you are going to lose money. But in futures trading, when you are selling short and the market is going down, you are making profit. So let me see if I can just quickly use an analogy for us to understand futures, so that you understand how you can make money whether the market is going up or down. So assuming that someone is selling rice, please follow this closely. Somebody is selling rice, and at today's price, a bag of rice costs 50 Ghana cedis. But you are thinking that by December, the cost of rice is going to go down to say 25 cedis. So you go and make a deal with the person that I want you to sell. Oh, we are running out of time again. So we have 10 minutes left, and I wouldn't like us to have to come back in again. So let me round up how to set up the trade itself. Later, we'll explain features trading into detail so that you clearly understand it. Okay. So let's go within the next 10 minutes and see if we can set up a trade quickly. Then we will be good to go. So the last time, Hartwell gave a trade call somewhere. I'm coming. So let me just give an example of, let me see if I'll see a trade call somewhere. Or let me use the crypto elites page. I think we should have something there. Come. Fish. This one sometimes can misbehave. Searching for elites. Okay, elites admin. Good. So we should have some trade calls here that we can use. All right, so this is an example. So let's take note of this. Okay, so you see this one, that's CHR USDT trading pair, sell limit, entry 0.3. And you see the take profit. The take profit is lower than the entry point. Please hope you are seeing it. Entry is 0.3012. Take profit, that's the price at which you take profit. First take profit point, 0.29. Second take profit, 0.28. So you see that in this case, your profit is increasing as the price of the coin is dropping. That is where we have sell short. I was going to explain, but time will not permit me to do that. So we have another training on features trading by itself. Okay, so that I can give that knowledge. Or better still, I'll put an audio message on the page after the Zoom to explain that. Okay, but for now, let's just look at how you set up the trade. So when the trade signal is given like this, So you have the entry, you have the take profit, and you have the stop price or the what we call the stop loss. The stop loss is to make sure that you don't get liquidated. So usually the stop loss is set to be better than the, what do you call it, the liquidation price. So when you come here, this is a sell order. So it means we are selling short. Our entry point is 0.3. Okay, 0.3, and they're saying limit. So let's search for the coin. So you have the Y, the X, where you used to search for the coin. So search for the Y, so CHR. We are not going to actually set up a trade because it's already passed. So CHR USDT, you search for it. Set your margin to isolated. I've already explained all this. Select your leverage. In the trade call, they said we should use a leverage of 5x. So you come to where your 20x is, select on it, reduce it to 5x, which is your leverage. Okay. Then, and it says limit, so we leave it on limit. But once again, when you come here, you see that we have limit. Forget about the rest. But if you look through, you have limit, you have market, you have stop limit. The way I explained the market limit and stop limits in the spot trading is the same thing that applies here. So we are not going to go through that again. So the call says we should use a limit. So we put it on limit. And then we set the entry. So the entry is 0.3012. So where you have the limit price, you put your entry there, 0.3012. Now, you can see something here where you have TP and SL. When activated, you see it. Okay, TP and XL with the yellow circle close to it. That is where you use to set your take profit and your stop loss. Now, the first take profit point here is 0.290. The second is 0.2800. So whichever one you are comfortable with, you go for it. So assuming that we are going with the second take profit, which is 0.280. When you come to take profit, you type your 0.2800 here. Then where they set stop loss, every trade call always has a stop loss. So the stop loss price is 0.3100. So you enter your 0.3100 stop loss. Once you've done this, the next thing you want to do is, if you have money here, usually, like I was saying, if I had maybe about $10 in my futures trading wallet, what you would have seen is that they'll tell me how much maximum I can trade to. So if I'm using 5x and I had $10, my maximum trading amount would have been like $50. But I can choose to trade with less. That's the good thing about it. So instead of trading with all, because the moment I trade at the maximum leverage amount of $50, it means that I'm using my entire $10 as collateral. But assuming I want to use just $5 out of my $10 as collateral, even though I've chosen 5x, I can use this sliding bar here. You can see this sliding bar. I can use that sliding bar to determine how much of my available leverage I want to use. So whenever you move, they tell you, you come down here. Below where I entered the stop loss and the take profit amount, you see some things that they've written max and they've written cost. The max would have given me how much is the maximum I can trade up to based on my leverage amount. And as I use the sliding bar to determine how much of my available leverage I want to use, they'll indicate for me how much I'm using as collateral. So that is how you set it up. So once you've indicated, you've set your margin, you've set your leverage, you've indicated your limit price. If it's market, you put market, and then you leave it. If it's stop limit, you put your stop limit, set your things, just like we did in the spot. Then you input your take profit amount, you input your stop loss amount. Then you use the sliding bar to indicate how much of your available leverage you want to use. Once you are done with that, you just click on the sell short button, and then the trade will go. So if it's market, once again, it will execute straight away. If you use limit, remember I said limits, in this case, limits will be, because you are selling, it will be greater than or equal to. If it was a buy long order like this, then that would have mean your limit order, the condition is less than or equal to. Don't forget that I mentioned that in the spot trading when we're doing it. Okay, so once you set it and you click on the button, it executes. And now you come back later, like I said, you will take features on this one because it's quite a lot. And I need to give some analogies to really get to understand what the leverage is, the features trading is. But remember I said it allows you to trade with more than you have. Please, is this clear? Is the feature setup clear? The most important thing for you to take out of today's call is how to input the call whenever it's given. Don't worry so much if you are still confused as to what features trading is. If a call is given, can you enter a call now? That is the most important thing. Please, is this clear to you? How you set up your features trade? Is it clear?
Sure.
Is it clear?
Hello, Josiah.
Yes.
This is Hawari.
Yeah.
I don't understand how you got the stop loss. Where did you get that from?
It was a call, like I said, it's a trade call that is given here. Can you see this trade call I've shown on the WhatsApp page?
Yes, and I can now see it. Stop price. Okay.
Yes.
All right. Thank you.
So whenever a call is given, that's how you do it. So if it's buy, you click on the buy button, set up the things, just fix the values inside. If it's a sell,
okay,
you click on the sell button, input the values as they are given on the page. Okay. Always
hello, sir.
set your margin to isolated and set your desired leverage.
Yeah, hello, sir.
Yeah.
Yeah, about that call, I think they give the 3 take profit. But is it possible that we can use all at a go, or we can just choose either the second to last to set our
you can set it to the last